Yeah, good morning. I mean, this has been indeed a very demanding quarter for us, obviously driven by the charges at Siemens Gamesa. There's two main things which were driving the challenges at Siemens Gamesa. The one thing is, as you said, there is in two platforms of the onshore fleet, the 4X and the 5X, a quality issue. After a certain operational time, we recognized fixes which we have to do, which obviously amount to roughly 1.6 billion in charges, and there's around 600 million in charges in addition with the offshore ramp up. We are ramping up around 4 factories at the moment to really satisfy the demand which is there for offshore, and seeing the shortage in construction workers, delays, but still challenges in the supply chain. That is something which meant for us another 600 million charge, and this is obviously coming together, and this is obviously overshadowing the actually excellent performance of the conventional energy business.
So Christian, as you tally up the numbers from those wind turbine issues, the faults, the repairs, the replacement costs, what scenarios are you banking on in the future? What other wildcards could there be at this stage as we talk about the overall costs?
Yeah, I think obviously the one thing is obviously the quality problems really result from the past, where I think we have too fast rolled out platforms into the market. That is not a cost issue per se, that is really a quality issue in terms of going too fast with new products into the market. And the other thing is obviously now stabilizing the business in terms of ramping up the new factories. And we're definitely looking at the moment in terms of how do we ensure that we stabilize the work processes, that we really ramp up productivity. And we also, on the quality side, we have established a joint task force with the Siemens Energy people to work through the quality problems. I still believe the market itself, and you see it with the 7.5 billion orders we got in the wind business this quarter, is, let's say, a very interesting growth market. However, obviously, it has to be set up in a way that you can run a profitable business. And obviously making sure that we slow down this fast rollout of new products is a key element in this. And this focus on, let's say, less product platforms and more focus on certain regions will be a key element driving that forward. And we're going to reveal the details around it on our Capital Market Day in November.
Christian Grimmond can be joining in this conversation. In your guidance for 2023, you said that the problem that Gamesa is facing is more severe than I thought possibly before. Could you outline what would that mean in terms of the repair cost that goes in here? Because the analyst community is working with a number of $2 billion on that front. Sorry, could you repeat that question? I wanted to understand from you, how much would it take to fix the problems that you're facing with the Siemens Gamesa? Analysts believe that it could take about $2 billion to fix what's happening with the technical issues there.
Yeah, I mean, as we laid out for the quarter, obviously is a 1.6 billion charge in quarter 3 for the quality problems. There is some, let's say, related charges to that in quarter 4 expected, which couldn't be booked in quarter 3, which come in quarter 4. But we have assessed the situation as such, obviously, based on all the information what we have on a relatively thorough technical analysis, and this is what we're looking at the moment in terms of fixing these issues. Keep in mind, the charges are provisions for the future, so we expect this really over the next years only to evolve, and it will take us 2 to 3 years, obviously, to work through this. However, the charges we have obviously now to take now, and we're going to work through the different elements over the next couple of years.